Okay, we can start.
Yeah.
Yep.
Good morning, guys. It's our second week trying here on YouTube. As you can see, the markets do not slow down. We caught an epic move this week. This was historic. We haven't seen this in a long time. So rather than go right into prices, we should go over the new scenario because the market digested all this news from Wednesday when the president made his announcements. And what did it do? Collapsed over 2 days. The market keeps saying it collapsed. I don't think it collapsed. In my opinion, it got back to fair value. So look at the big name stocks. They were so overpriced. You look at valuations, they were there. How many times people have talked about it? Overvalued, overvalued, overvalued. So what they do, they brought themselves back down. So what looks like a collapse has brought itself down to value. But the problem is none of that money was cashed in. All that money was fluff. So when you sit there and you say the market lost $5 trillion of value, well, the market had $5 trillion of excess value. The big names were the indicator, and the things that go with it, because all those big names are in every 401k, every pension fund, every IRA, every passive investment. So you have ripple effects. Markets have to adjust, they have to trim down, so you get ripple effects. Now you get opportunities. What we were trying to do, and we talked about this last week, and we've been talking about this since the beginning of the year, there are times to make money, and there's times to step on the side and let the market come down. That's what we've been doing. Now we're getting interested. Okay, Friday, yesterday, was a day that scared everybody. Thursday, fine. We've had days of the market just washes out. But when you get a second day and you see the VIX move out, now you know there's a little panic in the market. Panic, in my opinion, over 4 decades that I've been doing this, creates opportunity. So we're looking for opportunities. But keep this in mind. As the market, all the rumblings you hear is that the president's policy change caused this collapse. I don't think it was a collapse. I think it just brought it back down to earth. This cloud or this ride up is now being brought down to value. Now you could start becoming a trader again. So if you avoided this, which most people haven't, that's why the VIX is out here and that's why the panic is around. People have given back so much more. It's kind of, you don't have to answer to me, answer to yourself. Everybody was on the boat, let it ride, let it ride, let it ride. And the same thing, I'm hearing it from family members now, I'm hearing it from close friends. It's always going to go back up. I don't know. Why should it go back up? Why shouldn't it stay at fair value? And we're getting into that area now. I'm going to show you some of the big names because we don't trade those. We use them as gauges, as indicators. And it's good that we don't trade them because everyone else has them on, whether they know it or not. I mean, I probably have it on whether I know it or not. All the little passive investments you got in your 401k and any mutual fund, they have those big names in there. So no matter what, when you see your March statement, which is quarterly, you can't believe the hit you're going to take. What's even worse, April the 5th, I had to go look at the date. We're 1 week in. Where do you see the next hit you're going to take if you update that? That statement you're going to get at the end of March is going to look good compared to now. And this is where you have this panic effect. Everybody gets nervous, impulsive, and then panic. And we're in the panic mode now. And the market now goes from figuring out how to make your money back to how to protect what's left. And that's what we're in now. And that's the way we look at markets. And that's when we say this is opportunity. A few things that we're looking at. Let's go over them now. First, let's go over the big names. I just want to show you some of these moves. Here we go. Let's go to the big names because everybody on here, whether you know it or not, you have it. We'll go to the first one, Apple. Everyone has Apple on. Okay. I mean, this is epic. And if you want to look, this is 250. And what is this? We're new to this on YouTube, but if you belong to the group, Valentine's Day was our day. We said Valentine's Day is the inflection point. You know when this is? Valentine's weekend. Look at the market from 250 down to 190. We are getting to an area now where, in our opinion, we're getting to value. Okay, if you belong to the group, you'll know what our value price is. But when the market's free falling, you can say this is value, this is value. Okay, well, no one knows where the value is. Okay, we have our opinion. We're getting close to the value. You want to join the group, you'll find out where the value is. But we avoided all this. No one else avoided it. Most people didn't avoid this. They have it on. Apple is one of the staples. That's one. Let's go to the next one. NVIDIA, the cash cow of the year, okay? This was the cash cow of the year. Not anymore. The cash cow is giving it all back. This is also getting to a good area, but you're getting to some that are getting to value areas. You're getting to some of these big names are getting to an area where they're extending down because the market is still too crowded. Apple is always going to be crowded, but it's going to get to value. In our opinion, NVIDIA is getting close to value, but it's still crowded. People don't understand it yet that this can go down more. Then you're going to get an opportunity. This is going to get an opportunity because this is going to extend on panic. Apple is going to get an opportunity because it's going to pull into value. There's differences, and you got to know the differences, and that's what we are. But look at this. Look at how much you've given back. Same thing. Look at the date. Valentine's Day. 140 into 145. Trading 95. Looks like 50%. And this is not over a couple of years. This is over what, 7, 8 weeks? 6, 7, 8 weeks? That the problem is this speed is what's causing this panic. That's what's going on. Those are a couple of names. In the interim, what opportunities are they creating? That's what you want to hear. Okay, I'm not just giving you a reporter. I'm giving you a report that you can hear on television. But what does it do? It takes down the tide. What's our opportunity in our opinion is the world. Okay, the world is making adjustments. Who's giving what? Who's exporting? Who's going to import? Who's going to pay the tax? The world still needs 100 million barrels of oil a day. The world still needs food. The world still needs base metals. They're still going to need copper, but they're falling apart. Why? Because it's circulating. There's friction. This is the opportunities we look for. So what are we looking at? We're looking at oil. Oil went down $10. 2 $5 days in a row. That's serious stuff, especially when you talk about a $70 rally. Look at it. I mean, if you want to know something, this is every chart. I could just throw any name up here. It's going to look like every chart. But the opinion is that when the first day, we talked about this yesterday if you belong to the group, the first $5 day, the market made sense. The second $5 day, the market fundamentals are coming out. I read future spreads. I read the products. I understand a little bit more maybe about commodities than I do about equities because I did it for over 40 years. Now oil is getting to a fundamental area. So now you're getting opportunities. The first Thursday, there was no opportunities. You leave it alone. Now on Friday and probably into Monday, you're going to get opportunities. I'm going to explain the opportunities that I'm looking at because the world still needs, there's still global demand. We didn't lose a quarter of the population on the planet that doesn't need this. So the opportunities are there. So we're going to tell you, is it in heating oil? Is it gasoline? Is it in oil? And what equities? So that's another area we're talking about. Another one, something that doesn't go down. Okay, and we've been on this for a year and a half. This is the price of gold. We talked about this last week. We said gold could drop $100, and normally that would scare everybody. It doesn't mean a thing. Every pullback, there is demand in gold. Okay, and central banks and the public. Gold is becoming a currency. Okay, so it's creating a currency. Someone's got to have it all to put a real value on it. Look at the price of gold. Every chart you look at, guys, is down, 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 right? Every chart. It's hard to find one. Look at gold. This is nowhere. This is actually one of the biggest pullbacks. There's been no pullbacks in gold, and I don't think there's going to be any. This can easily go down to here, which would be another $100, $105, $150. Big deal. We still like gold, but incredible. You put that chart up, you say, where is everything on the planet? Why? I'm going to show you another one. Look at the price of silver. Now, this is the one that's speculative. Central banks aren't buying silver. So you see gold, and you say, well, I got to trade silver. Well, silver's like every other chart, right? So now you look for the extensions here. This is the opportunities we're going to look for in silver. Okay, so we think, well, think about it. Gold's up here. Silver's what every other chart is. These are the distortions that you got to recognize. Okay, so that's my point. Price of foods, same thing. We're still going to eat the same amount of food. We're still going to consume the same amount of commodities. This is something I did for 4 decades, commodities. This is the opportunities that are popping up. All right, let's go some quick questions.
We got a couple questions here. Thanks for showing us what you're looking at. I started selling puts on WMT, XYZ, and Palantir.
Selling puts.
Yep.
Okay, you're playing with fire because when the VIX goes higher, those puts will go higher, but it also means there's more pain coming. Okay, what we did on our Palantir position, we did this about 3 weeks ago. We bought Palantir, it popped up, and we sold calls because those were expensive. So now, with long Palantir, it's pulling back pretty significantly, but we earned an extra $5 on it by selling. So let's put up Palantir. I'm just going to put it up as an example because it's going to come up anyway. Okay, this is Palantir. Okay, we bought it around here. When it bounced around here, we sold some calls. Now it's trading all the way down here. Look at it. It's gone from 90, it's not dropped over 20 points in what, a week and a half? We still are up on our trade. Imagine a 20-point pullback and we're still up on our trade. We grabbed it well. But if you sell puts, the market's trying to do this. What you got to be prepared for is you have the money to lay out, because now you went from selling a put and earning a couple of dollars, you're going to be put to your prices. Okay, which means you're going to have to lay out $70 a share. And remember, when you sell puts, it's 100 shares per. So you're going to need 100 shares worth of notional value to put up here. Keep this in mind. The market doesn't have this. They think it's free money. It's free money 90% of the time. The 10% of the time, it catches people off guard and you cause panic selling. This is that 10%. So be prepared when you start selling puts. Realize what can happen. If you're comfortable and you can lay the money out, you have nothing to worry about.
Next question from The Funny Way. Thanks for all the good info. Do you think it's good to invest in silver or gold now for the long term, say 5 years?
5 years? I don't have a 5-year view. I will never give you a 5-year. I'm not an economist. Okay, the world changes, as we can see. It changes a couple times a week. 5 years. I overall think we've had the move, but I don't think it's finished. I think gold is going to become a currency, and I think silver inevitably will fall back into it. So I would look to buy silver scale down for trades. We aren't we've been saying this since the beginning of the year. We are not investors. This is not an investable market. There's two giant administrations that are so opposite that the market has to adjust. So that we look for trades. We don't look for investments right now.
Okay, those are the comments we have for now.
Okay.
Guys, if you have any other trading questions, just please put them in the comment section here, and we can move on to other things if
Yes.
you like.
Okay. Now let's go to what we're looking at. Okay. Price of copper pulling back drastically. Okay. Copper's been good to us for about a year and a half. Why? Because copper still has a story. Copper still has the demand on pullbacks. Every time we've had these pullbacks in copper, we've grabbed some copper or we've grabbed some copper equities and they've worked. Why? Because there's a story here. This is going so fast that it's going to get to these story areas. So we think you could start to look at copper. We're very close. Actually, I'm looking at my sheet over here. We're getting very close to an area in copper. Now you can buy copper, the futures. You can buy copper on the LME, or we like to look for copper equities also, because not everybody wants to trade futures. So we're looking at some copper equities. First one pops up, everybody knows this, Freeport-McMoran. Now look at this. Okay, you're getting to a point where we like copper. It's free falling. So obviously this is going to extend. It's going to wind up making itself cheap if we're right about copper. If copper gets to the area that we're looking at and copper holds and bounces just to get back in line, then this is making it so cheap that you can catch a trade. Not an investment, a trade. Okay? If you're sitting there and you want to buy Freeport, and you want to make an investment and you buy it here and here and here, excuse me, okay, and you try to catch 10, 15 points, it's a nice investment. If you could get this thing to an area that we're looking at and you just get a bounce and you could catch 10 or 15 points on a bounce, instead of sitting there as an investment and waiting for it to grow, you caught this in a month. I think these are a couple of these they're distorted and they're out there. So this is one of them, Freeport-McMoran. Another one I look at, let me put it up here, for copper exposure, TECK. So let me find it, and then I'll put it up there for you. TECK.
Smack in the middle.
There you go.
There's two of them, yeah.
Okay, there's two of them. I gotta put one up. Another one, same thing. This is a way of getting copper exposure. Okay, it's free falling now. I think you're within a few days of having it free fall into a great trading spot. Okay, we have these spots. If you belong to the group, you'll know the exact spots we're looking at, because this is something I think can bounce. So if you could buy this and catch a 10-point bounce on a $30 stock, 30% return on your money, I don't know many better investments than that. The market is going through panic. They have to liquidate. If copper does what it's supposed to, it's going to create opportunities in these equities. That's copper as an example. Okay, let me just look at my sheet. The ones you're looking at. Now listen, I'm a trader. Okay, I also have, I trade for my children. I trade for longer term that I very rarely trade. Okay, I've traded Apple about 4 times. Okay, and I don't listen to the noise. And I remember buying Apple at around 150, and when it got to around 230, I sold it. Then it came back to around here, this one right around here, which is around the 180 area. And then I sold it out right around here when I got to 240, and it went up higher. I don't care, because I don't look at all that. Once I'm done, this is for me. Now Apple is getting to the point. It's getting to an area where I'm looking to put it back on. Okay, and that's not for a trade. That's something that I look at. I don't look at it. Tell you the truth, I look at it when it gets to an area I think is cheap. I look at to an area I think is expensive, and it's usually like 100-point range. I'm getting to a point, if I'm going to let the group know about it, because actually the whole group says the same thing. We want to know when you trade Apple, because I don't trade Apple. I only trade it for something that I'm putting away. We're getting close to an area that I'm going to start to look at Apple to put it on again. Same thing. So that's one. Another one. That's these stocks. These popular stocks have stories. That's why they're popular. The problem is they just got so crowded, and everybody's story, the story was the same here, here, and here. Okay, now it's getting back down to where the original stories was. Nvidia. Okay, these are all big names. These are the ones you want to hear. But I tell you, we don't get involved. We are getting close to an area. I'm looking over. I'm not telling you where because you got to belong to the group. But we're getting close to an area in Nvidia. Now this is the same thing. Think about it. It's dropped 50%. We think there's a little more strain in this thing. And then we're going to, if you belong to the group, you'll find out what areas we're going to start to put NVIDIA on. Because this does have a story. It just has the same story. Let me put it right. It has the same story here, 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 here. Same story. Okay, the problem is when it gets down here, it's the same story. That's what we've been preaching. When something has the same story at every level, then you got to look for where value is. We think NVIDIA is getting close, in my opinion, to value. Not the fluff. This is fluff. This is the world coming back to earth. That's the point I'm trying to make. People are calling this, a washout. The market is getting buried. No, it's not. It's getting back to fair value. All right? Those are two examples. Okay, let's see what else we're looking at. Currencies. Why we think the dollar is recalibrating. The dollar is going to recalibrate, meaning we think the dollar is going to go lower. So the dollar, which has always been up here, which has been the currency, the global currency, is starting to converge a little bit. So it's coming lower. Other currencies are going higher. As we I know the president is pushing it in a way where he's not making enemies, he's trying to make it fair. But if we're not the dominant one giving money away, then the world's going to converge. So the dollar should start to come down. What do we look? We look for certain currencies that are affiliated with the commodities that we look at. We think an energy currency that's sensitive is the Canadian dollar. And the Canadian dollar is moving for other reasons because of I would say political friction. But in the interim, it's getting cheap. We traded it this week. Okay, look at the Canadian dollar. Okay, this is us. We bought the Canadian dollar here. Okay, we sold it on that Wednesday explosion when the president made an announcement here. Okay, just as a trade. We're still trading. But we like this longer term. So and you can see it's starting to come back down. So we're going to start to look at the Canadian dollar again because we think the price of oil is getting attractive, like we just said. So if the price of oil is getting attractive and the Canadian dollar is sensitive to the price of oil, then as oil comes down and we think it's in a hold area, then the Canadian dollar is going to get into an area that we think is a hold area. So we're looking to put on the Canadian dollar again. So you're understanding our logic. Everything goes back to most of the world trades the big name stocks. We try to trade what I got a little bit exposure to over 4 or 5 decades now is the commodity world. So I look for commodities because the world is not losing its population. The world still has a certain demands. Whether it's coming out of here, here, or here, we still got to consume. So I try to look for his distortions, and we're creating these distortions now. Now, another reason, this is just a little macro. Usually we like to go over trading, but after what just happened in the last 2 days, you got to be a little macro. You go around the world, anywhere around the world, ask him to name 5 stocks. I'm willing to bet, I don't care whatever language you say, that comes out of their mouth, they're going to be saying Apple, Google, Amazon. I don't know if NVIDIA's in that vocabulary yet. You ask anybody, you ask those same countries, name an equity in a different country. Name me 5 equities in Asia. Name me 5 equities in Europe. I don't think there are. I mean, you'll hear Alibaba, you'll hear maybe Baidu. You keep going. I don't think there's too many. Ask about Europe. What are the famous stocks in Europe? I don't know. So you know what that tells me? The whole planet has these names on. So what is going on? The whole world is getting out. The whole world is right now kind of giving a little friction of hitting back to President Trump's new idea of the tariffs and saying, well, why do I want to be in U.S. stocks if the U.S. is not the place? So you got the outside people that have caused all this fluff in these stocks. That's why they're coming off too. So that's what I think. That's just my macro view Actually, everybody's got their own idea. I'm just giving you my idea. I think the world is getting out of the big name stocks because everybody knows these big names. And that's what's causing these extensions, and that's why we're going to get to value. All right. Any
All
other
right.
questions?
Those are all the questions for today.
Okay. All right. So this is
1
where
minute.
we stand.
1 minute.
1 minute. Okay. So we have a minute left. You see, we talked about this last week, the first time we've been on here. Every week is getting busier and busier. We're going to continue that way. This week, what happened Thursday and Friday, is going to create tremendous opportunities because it's creating distortions. I explained what our distortions are. Our distortions are the commodity world. The world is not going to stop consuming the same amount of commodities, just where is it coming from? So now we look for something that I've had experience in. So we're going to look for opportunities in the commodity world that are going to get cheap. As the world gets back to normal, we're going to find things that are cheap and we're going to start to apply them, whether it's through equities or commodity futures. I'll see you guys next Saturday, 10 a.m., same thing. Go over whatever you want to go over.